Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Tuesday, June 9th. Firstly to the Euro US dollar, and here we see the market continuing in the uptrend that was established with the day prior to today's trading. That day was a very large white body candle bouncing off support at the Tenkan-sen indicator, currently trading at 111.32, and just testing below the Kijun-sen indicator and trading up through there in a very strong bullish manner. That Kijun-sen at the moment trades at 111.42. We have the market trading up above each of the Ichimoku indicators at the moment, suggesting we have a very strong bullish bias in all three time frames with the Euro US dollar. And looking across here at the Chica span, it's now just above the corresponding price action, but has been testing above and below in the recent past. So some indecision here in terms of momentum in that medium-term time frame, and certainly only just supporting this bullishness that we're seeing. The current candle, however, is very different than the candle from the previous day's trading, where we had a very large white body candle. Here we have a candle with no body, and it's something of a doji type candle, a candle of indecision. We have seen the buyers close with control. It's very, very weak control. The buyers have closed just above the midpoint level, but not enough to be a significant amount of strength from the buyers. So it's so close to the midpoint level that we might as well say that neither side really closed with control, but slightly leaning towards the buyers. The very small body, he suggests that there's been a very strong loss of momentum that the buyers had, and even though we don't have any downside momentum, we're not seeing a continuation of that upside momentum from the buyers. And all of this suggests that there is a possibility of a change of trend to the downside. Now, if we do see that change of trend to the downside, remember that we saw the market bounce off these Kijun-sen and Tenkan-sen trading at 111.32 and 111.42, and we're likely to see strong support coming in around that area once again. Also 111.60 just above there is a previous important support and resistance area, but more importantly for this market as it trades at the moment is the 112.89 level that we tested to for the previous day's trading. We were unable to close up through there in a significant manner, and today's trading we've closed around that level as well, and we've tested above there and been rejected. So 112.89 is going to be very important. Now, there still is an opportunity for the buyers to come into the market, but having tested up above this 112.89 region for the last couple of days, and on the back of this strong loss of momentum by the buyers, there's every possibility that we will see the market trade to lower levels. Now, just looking to the Fibonacci extension technique, or the Fibonacci projection, and what we're doing here is we're examining the relationship of the current first time frame uptrend to the immediate previous first time frame uptrend. And here we see the market testing today to the 61.8% level, with this indecision entering the market and the strong price rejection from that 61.8% level. It does suggest that there's a very real possibility of a change of trend in the first term time frame. So we'll be looking for confirmation of that with the market to make a lower high and a lower low. Moving next to the hourly charts for the Euro US dollar, and for today's trading it has completed. We saw the market open above the middle pivot point level, also opening above the Kijun-sen and the Tenkan-sen, suggests that we had a very strong bullish market in all three time frames. Throughout the trading day, the early part of the trading day, we saw the market testing to the Tenkan-sen indicator and bouncing off there in a solid bullish manner, but the market couldn't maintain the momentum up above there, couldn't trade to the first pivot point resistance level, and that strong bearish candle and the strong bearish close down below the Tenkan-sen, the green indicator, suggested that there was certainly quite a lot of weakness in that short-term time frame, and set the market up for this downtrend, with the next couple of candles finding resistance at the Tenkan-sen. And for quite a lot of that period, for about 4 of the next 5 hours, the market tested to the Tenkan-sen and we saw strong rejection from there. Now, the area around the middle pivot point level saw the support coming, and then the market was able to rally from there, close in a bullish manner up above the Tenkan-sen and maintain price action above there for the remainder of the day. But a very indecisive trading day where we saw the market trading higher, then trading lower, finding resistance at higher levels and support around the middle pivot point level. For the current session, we've seen the market open around the middle pivot point level, testing then down through the Tenkan-sen, bouncing off there in a bullish manner through the middle pivot point level, suggesting a possibility of the market to test through to the first pivot point resistance level at 113.48. But a lot depends on how the market reacts around the middle pivot point level, trading at roughly about 112.80, and we do have the Kijun-sen and Tenkan-sen trading around there 112.85 and 112.79, and we could see very, very solid support coming in off this level. If we see the market break out down through there in a bearish manner, we could quickly see the Euro US dollar on the hourly charts testing down through to the top of the cloud, which at the moment trades at 112.30, and below there, just below, we have the first pivot point support level at 112.16. Moving next to the Euro US dollar, and here we see previously very strong uptrending price action up above the Ichimoku cloud, the strong bullish breakout, strong bullish follow through, the market maintaining price action for quite some time up above the Tenkan-sen indicator, which is the green line here. For the day prior to today, we had a very solid answer from the sellers to the previous very large bullish candle that broke out up above the 124.70 level, and the sellers came into the market in almost equal strength. Closing with control, strong commitment to the downside. And then for today's trading, we've seen a confirmed change of trend, with the current candle making a lower high and a lower low. The only problem here is that we've seen a very, very large reduction in the size of the black body, and that suggests that that solid downside momentum that we saw for the previous day's trading in net terms between the open and the close has evaporated, and it suggests that the sellers haven't continued with the strength that we saw. We've also seen the market close between the midpoint level and the high, and that suggests that the strong control that the sellers had for the previous day's trading has also gone, and we've seen the buyers close with a very moderate amount of control. This suggests that there is a possibility of a change of trend to the upside, and with this larger shadow on the bottom and testing around the bottom of these 3 or 4 or 5 candles here down around the 123.76 level, suggests that the buyers are once again coming in around this level and the possibility of a change of trend. Now the problem here for the buyers is going to be the strong resistance at 124.70, and in the recent past we've seen that level hold as strong resistance, as we saw for today's trading, and we also have the Tenkan-sen trading around there at 124.72. So very strong support up above where the market's trading, even though the short-term dynamics in the market are suggesting that we certainly could see the market trade higher. So we will need to breach that 124.72 in a bullish manner, and if we do, we could see the market testing up eventually up to around this 126 region, this swing high, or if the sellers are strong enough, we could see the market test down to lower levels if we can breach down through the lows of these candles with the larger shadows, and they traded down roughly around the 123.74, 123.70 region. Now, just looking at the Fibonacci retracement tool with the US dollar Japanese yen, and here we're comparing the current first time frame downtrend to the immediate previous first time frame uptrend, and here we've seen the market testing to the 23.6% level, being rejected from there. As I've said, the loss of momentum, the buyers taking back control, although a weak amount of control, does suggest that there is a good possibility of a change of trend. So we will be looking for confirmation of that, with the market making a higher high and a higher low. Next to the hourly charts for the US dollar Japanese yen, and for today's session we opened down below the middle pivot point level and below the Ichimoku cloud and each of the Ichimoku indicators, traded lower after rallying and finding resistance at the Tenkan-sen, selling off strongly to find very solid support at the first pivot point support level. These two, the shadows of these two candles and the next candle with buyers coming in suggested that a rally was very likely. The market then rallied to find resistance around the Kijun-sen indicator, and we maintain price action around that Kijun-sen, not trading substantially through there. For today's price action, we've opened just above the middle pivot point level, and for the next couple of hours, finding some support around the middle pivot point level and the Kijun-sen and the Tenkan-sen. Some very indecisive trading off the back of this support, and there is some doubt whether the market will be able to rally to higher levels, but if we do, we'll be looking to their first pivot point resistance level at 124.75 to hold, and we have the Ichimoku cloud very close to there at around 124.82. If we see selling coming in and a strong bearish breakout down below the middle pivot point level in the Kijun-sen and the Tenkan-sen, trading down to 124.35 to 124.29, we could see the market testing down to the first pivot point support level, trading at 123.86. Next to the Aussie dollar, US dollar, and we see a market that's continuing the trend to the upside. This candle, second last one on the chart, is certainly in contrast to the previous day's candle, a much weaker one. Previously we saw a white body candle testing to Tenkan-sen resistance, the buyers strongly in control, and here we have formation of a small black body candle, so that strong upside momentum in net terms that the buyers had for the previous day has evaporated. Some weak downside momentum in terms of the size of the black body. We have seen the buyers maintain control, very weak amount of control. We've closed between the midpoint level and the high, and with the larger shadow on the bottom, it suggests that there's been some strong price rejection from the support level at 76.72, and that has been an important level in the recent past, holding as support and resistance in the recent past. The important thing here, however, is that for the third consecutive trading day, the Tenkan-sen indicator trading at 77.07 has held as strong resistance for this market, and it has been a strong barrier and may continue to be. And as we see this current candle develop, we are seeing that area once again hold as resistance, but also we need to be watching this 76.72 level to hold a support, and that's exactly what we're seeing at the moment. Now, with the market being bearish in all three timeframes and trading below each of the Ichimoku indicators and supported by the Chica span, it suggests that if the sellers are strong enough to break out down through 76.72, we could see the market testing down to the 76 level of support that has been tested in the recent past, and then perhaps eventually down to the 75.30 level of support at this major swing low. If the sellers are strong enough to breach down through there, we could eventually see the Aussie dollar testing down to 73.90, but certainly a lot of trading to go before we have any strong suggestion that that's going to happen. In terms of the hourly chart for the previous day's trading, today's trading, I mean, that has finished trading, we see very unexciting trading. The market is opened above the middle pivot point level, just within the top of the Ichimoku cloud, testing up through there, no strong follow through, trading down through the cloud to find very strong support at the bottom of the cloud, then eventually rallying off that, trading through the Ichimoku indicators, but no strong follow through throughout the day. Throughout the day, the market found strong support around that middle pivot point level once again, with a very unexciting trading day. At the moment, in this new session that's opened, we have opened around that middle pivot point level and the Kijun-sen and the Tenkan-sen. Uninteresting trading. It's going to be a very important level. If we do see selling coming in, we have a very thin part of the cloud for the early part for the next couple of hours, and we could eventually see a breach down below the bottom of the Ichimoku cloud, trading at 76.61. If we see a bearish breakout, we could see a test to the first pivot point support level at 76.47, and then even possibly down below, depending on how solid that bearish breakout is. 76.08 is where that second pivot point level trades. But if we see strong buying coming in and the market trading through the Kijun-sen and the Tenkan-sen, it wouldn't surprise to see the market test up to the first pivot point resistance level at 76.85, and then if we see bullish activity up above there, we could trade to the second resistance level at 77.58.